Welcome back, everyone. This is Thomas Triple T Tie with another new bullish crypto analysis. Before we dig in and take a look at the Bitcoin daily analysis, remember this is for edutainment only and not to be considered as financial advice. Additionally, I would appreciate it if you could help spread my analysis out into the world to help people make more informed decisions, especially newbies and people who have a tendency to FOMO in at the wrong time. So with that, but you can do that by smashing the like, ringing my bell, hitting subscribe, and share your thoughts in the comments section. Let's dig into the news, and then we'll take a look at the analysis. Two news items today. The first one is from CNBC. They talked about the SEC lays. They said SEC lays out path to coveted Bitcoin, a spot Bitcoin ETF, but this article is about how recently the SEC approved Tucrium. It was an application filed under the different act, and they approved that. But they pretty much the Grayscale and others have said that that's the same act that would qualify spot ETF. But in the fine print, if you will, the SEC pretty much said that they'll approve the spot ETF if the crypto exchanges institute comprehensive surveillance agreements with the ETF listing exchanges, and they will get the crypto spot ETF. The problem with this fine print is, well, not the problem. The challenge with this fine print is that crypto mainly is focused on decentralized, right? It's decentralized. So if they want to put in surveillance, as in like KYC and all that stuff, well, that's gonna be challenging to be able to collect all that stuff when crypto is mostly decentralized. So and Grayscale have mentioned that they may potentially sue the SEC. So it's interesting to find out that was in that was the fine print. According to Lynn Alden, I've mentioned her before. She's fabulous macro analysis, and let me zoom this in for you. She mentioned in her recent podcast that why she thinks Bitcoin is she's long on Bitcoin. And I shared that link, I believe was yesterday, so feel free to check that out. But here's a recap of it. She said that the money's going to be the digitalization of money is inevitable. Totally agree with that. Many things will be digitized. And Bitcoin is strong enough to push back on government control. And it'll be able to compete with the central bank digital currency. So she said that it checks a lot of boxes, and but it checks a lot of boxes. Even boxes it doesn't check off are within sight of being able to check off as technology improves, and as it gets more widely held, it becomes better. So she's long term. She thinks Bitcoin, you can call it the fastest horse in the race. I'm not so sure about it. Bitcoin being the fastest horse in the race. I think like very long term, way down the road, potentially when supply gets squeezed, and that's potentially then. But in the meantime, altcoins still outrun Bitcoin. Some altcoins. And she mentioned that she wouldn't recommend 100% allocation in Bitcoin. I would not either. But it's silly not to have any at this point. I completely agree with that, 110%. The current crypto market heat map is still blood red. The ones that are purplish or green are stable coins. And you see here it's blood red. Bitcoin dominance 41.48, and Bitcoin dropped 8.34 in the last 24-hour period. Ethereum 2.7, drop 6.33%, dominance 19.83. Notice Bitcoin's dominance dropped slightly, and Ethereum's dominance is still up there. It's quite interesting. And ADA dropped 11.24%. AVAX dropped roughly 11.14%. So big drops for some coins. Bitcoin's well, let's do the total market cap first. Total market cap 1.87 trillion. That's down 7.28% for the crypto market cap. And that early this morning was I think 1.86, I believe, or 1.87, I forget, but it's still pretty low. Bitcoin's market cap 691.9 billion, and you can see that drop if you look in my prior videos from yesterday. Here's the current daily chart from TradingView. Let's let me open this up so you can see some numbers too. My analysis from yesterday mentioned that BTC is unlikely to sustain a rally and stay above the 40K level, and that it would head towards the next support, which is 39. And so yesterday was up here, and all the indicators down here were bullish. I went against it and said that I gave it 2 crabs and a bear. And that was risky, but it worked out. And I read on my YouTube, someone said that he saved them from going long. So I'm glad that helped somebody. So Bitcoin, what it did was it crushed several critical levels. It dropped back below the Bollinger basis line here, and that was 39.4K right there. That was my alarm for my next event. And then it dropped below the 39 support resistance level, broke through 37.5, and then it came close to, it wicked all the way down to close to 35 entry level here. Support resistance there, support if you will. It came close. It bottomed out at, I believe it was, man, that thing is red on black. Hang on. Yeah, it came down, it wicked all the way down to 35.5. So came short of the hitting this entry level. By the way, these entry levels have been changed to adapt to the move down. But if you had an entry at 37.5, that would have taken already. And that was a FOMO, a prior FOMO entry level at about 10 or 15%. I forget which, but probably 15%. It remains in the bearish territory below the 50-day moving average, is pinkish line here. And now it's back down below the Bollinger basis. And previously it's been, and that because it dropped below, it didn't sustain a break above. So it's pretty much, what is that, 30? So that would be 30 consecutive days that it's been below the Bollinger basis line. And the previous period had 12 to 38 days where it came below. So it's approaching the max, the recent max of 38 days. So that's a big deal. It remains in the bearish territory, like I said, below the Bollinger basis, and also the bull market support band, this gray ribbon here. The nearest in the bull market support band is between 41.8K and 42.8K. The nearest support would be this green dash line here, which is the 35K level, and the daily let me see what else. And the resistance would be this reddish line here, support resistance above here at 37.5. So Previously traded volume in this range, as you can see right here, it's really low. So, and that's covering the range dating back to mid-March. The daily volume finally had a decent volume up here. It's 2.44 times the moving average. And you might be wondering, is that a capitulation type volume? No. I'll show you. Let's go into the weekly chart to better see this. A capitulation event volume would look something like this. So here's today. So if you look combine today into this week's volume is still below the moving average. Capitulation event would be like this. See this candle breaking through the weekly moving average? That's a capitulation. And I'll show you another one. That's a capitulation type volume. So no, it's not. It's probably the one last. Those of you who have been following me for quite some time, you know that it's the one remaining event that I'm waiting for to call it the bottom. I have yet to call bottom. Okay, so big volume, but not enough for a capitulation. In fact, it's a fraction of a capitulation event. Down below, the white J line of the KDJ flipped back down after flipping up yesterday, down to 32, and it's slightly above the blue K and the red D lines, and I gave that a bear. The MACD line was at 1081 when I did this chart. It flipped back down also below the red signal line, printing the 30th of the 31st bearish histogram bar. I gave it a bear. The only bullish histogram bar, it was right yesterday, right here, this tiny little thin one. And the red RSI, the blue CVD, and the white momentum or MOM indicators flip aggressively down. You can see that right here after flipping up yesterday. And the red RSI line was at 38 when I prepped this chart. I gave it a bear. The blue CVD line was at 1.807 million. Gave that a bear. The white momentum indicator is at negative 4,175. I gave that a bear. But if you recall yesterday, all these indicators had bullish signals. And I did register a bull with warning signs all across all of them, and up, I believe up here too or something. But yeah, I said nope, going against the indicators, and it's going to be bearish. And so it was a good call. Pretty proud of that call. So in summary, what do I think is going to happen? My opinion is that it was a shock to the market, and so people are going to take a little bit of time to digest all this stuff. But in the meantime, Bitcoin is going to chop between this 35K zone and 37.5K zone right in here. In fact, it's put almost in the middle right now. It's going to chop right in there before deciding its next move. And that's my analysis for intraday, meaning within the next 24 to 48 hours. So overall, I gave it two crabs for choppiness. Let's go to the options max pain. And if you don't know what that is, check the, if you have questions about what any of these things mean, feel free to check out the reference guide in the description. Here's the options max pain for the next several periods. 39K for the 6th, 37K for the 7th, 39K for the 13th, and for the 20th, it'll be 38. So we're looking between 37 and 39K. But these future periods can change. As far as by expiration, here's the volume. Volume are contracts that have been filled already. You can see that on the 6th here, contracts have been filled. There were more puts, and puts are contracts that allow the investor to sell and not the obligation to sell. So, for example, let's say that I have the option to sell at 40K, and the price dropped down to 35.5K. Well, guess what? That's a good option. I can sell my 40K option, right? Even though the price is at 35. So that's pretty cool. So you see they close out these these positions here, these options here. That's good. But so you go over here, you look at the open interest. Those are contracts that are still pending and open. And there's not a lot of open interest out there for the next few periods. So max pay may not be accurate in potentially predicting the movement towards those max paying prices. Here's the heat map. There's a sell wall up above at 50K still, but I wanted to zoom in and give you a good view of this section right here. So as you can see, here's 35K. The wall didn't move as Bitcoin dropped. So that's a good wall. That's a major buy wall that's been there for a long time. It didn't move. In fact, it got more red. The size increased even more. But what's interesting is this zone right here. This zone was pretty much, it looked like this, right here. But notice how thick and reddish it got. So more orders came in, more limit orders came in right here. So they're waiting for that wick down to buy between 34 and 32K. So that's interesting. Down below we have the buy wall at 30K, 25 and 20K is still there. So, I should go back and tell you about the new entry levels. I'm going to minimize this for a second so you can see. Okay, so new entry levels include, so 37.5 was filled, so I'm going to lower it down since now the candle is way down here. And the new entries would be 35K, it would be the FOMO level at 15%, the 33K at 20% of the budget, 32K would be the sweet spot still at 30%, and 30K 25%, and 25K 10%. Again, these entry levels are for edutainment only and not to be considered as financial advice. Notice this zone though. Feel free to adjust. If you're gonna use those advice for your own edutainment, feel free to adjust it based on what's happening here between 32 and 34. Here's the liquidations levels map from High Block Capital. This is for 20 to 100x high leverage positions only for Binance. What is shown here? So currently a negative $8.5 billion. Negative just means there are more excess shorts. So what does this mean? This means that the levels up here, these are the shorts, high leverage short levels. Take the money in them, you minus the money in the long levels down here, and you have the excess. That's what delta is, excess. At this price range, that's near the point where someone could take an opposing a counter position and a high leverage counter position, influence the spot market to price to go up. For example, buy more Bitcoin, right? And they take a long position on these derivative market, on the perpetual futures. Like take a high position, influence the price to go up. They win on this side, right? I mean, at this price range, that could happen. It could, that could. It's getting there. It's negative $8.5 billion. That's typically where it would happen. And if it goes down even further, it increases the chances. So it's not a matter of when, but a matter of not if, but when Bitcoin is going to go back up to wipe out some of these short liquidation levels. I'll bet you, yeah, for sure. That's it. I hope that was helpful for some of you, especially those who want to FOMO in the wrong time. I'm glad it saved you some pain. And feel free to smash the like, ring my bell, hit subscribe if you haven't, and share your thoughts in the comment section below. And this is my second to last video. I have one more for the Ethereum weekly analysis. So I'll see you in that one. Peace.